Futures numbers on the market day report here are provided by Bar Chart. Let's go to the corn market first. See if we're still gaining here by double digits. Yes, we are. May up 16.5, 596.5. We could technically and theoretically see $6 May corn. December is up 8 at 512.25. So we're well above $5 even on the new crop. May soybeans up 23.5. We're still gaining 14.13. Got as high as 14.16.25. By the way, we made some new contract highs back over there in that corn market. Let's go to the wheat market. July Chicago up 19.5, 653. Kansas City July wheat up 21.25 at 614. Minneapolis July wheat is up 14.25 at 670.25, 5.5 cents off the top. And May cotton is up 95 now. December cotton up 70 at 82.16. And for analysis and explanation on what we're seeing here today, let's go to Chris Swift with Swift Trading. Chris, my goodness, we started out with gains and now we're even building on that. What is going on in this market?
Adding to it, I tell you, and we're really close. We're 3 cents from that $6 level on the May corn now. It's a combination of factors, John. We look at the U.S. dollar resuming its downtrend. That should help our export market just a little bit. The dryness in South America that helped promote their harvest of soybeans is hampering their corn crop. And there seems to be no let-up at all in livestock production anywhere in the world, especially with China still growing in livestock production. So we have found ourselves in a demand-driven market right now.
Well, and we're also hearing that that safrinha crop in South America may not be good. But is corn giving a lift to the rest of the grain complex then?
Well, I think it is, and especially beans, because the bean market had been a little tepid to move higher when the corn was, but bean oil is part of the complex that's really helping the beans now. And wheat's primarily a drought issue. The winter wheat that is in the ground, some of it looks good and some of it not. I think they're looking at about a 53% good to excellent category for the crop rating. But the spring wheat, that Minneapolis spring wheat, that is the one where we see all of the drought from central Dakota's west and, moderate drought east of central Dakota. So that runs into the Minnesota and to the Michigan area where some of that spring wheat's planted. And I think that's why we're seeing the wheat markets keep it so firm.
So why, what about this cold weather that Jeff Womack was just talking about? How much of a factor is that in this market?
Probably not a lot. I mean, it could be some, but I don't think it would be a real big issue. We know that anything cold-wise is going to be very short-lived, so I don't think it'll be that big of an issue.
All right. Well, we'll take a break and come back here in just a moment, Chris. I need to get your thoughts on what's going on over here in this livestock trade and how much of the grain complex is affecting that. We'll do that straight ahead here on the Market Day Report. The new beef and pork cutout information has been released from USDA. The beef, both of them higher. Choice up $2.18. The select's up $1.36. That choice is $272.29, and we've got a $4.39 spread between both of those. The pork cutouts for the carcasses up 76 cents. The loin's down $4.14. The ham's up $12.14, but the belly's down $6.12. At $183.58. Look at these cutout values, Chris. So far, the consumer just keeps coming to the market. Not just the domestic consumer, but if you look at last week's export sales numbers, beef and pork were respectable, and China was in there buying a lot of it.
China has been a big buyer. They noticed some information this morning on Urner Berries that I forget what the actual number was, but it was a significant increase over last year for beef consumption. So that's a good market for us to be in. Both hogs and cattle seem to be running into a little bit of a resistance up here, though, as we're facing the best beef eating and actually, to some extent, pork eating time frames in the next 2 to 3 months, and consumers faced with the highest retail prices that we've seen. So it's going to be interesting to see how we can continue to keep the box beef prices and the retail prices higher, and then expect the consumer to eat so much of it that it finally impacts the cattle market.
Well, you bring up a couple of good points there. Number one is the domestic consumption and demand. But what about this cash cattle trade? I noticed where the Fed Cattle Exchange listed almost 4,000 head, and none of them sold. None of them met the reserve here. So does it look like the feedlot managers may dig their heels in at this point and demand that we have at least steady, maybe some higher money this week?
It's possible, but the packer, I think, took the wind out of the market last week, only killing 641,000. This week, not much better at 45 to 50. So we're just not processing as many animals as what is being backed up into the feed yard, and that's keeping that wide margin to the packer as is. And I don't see any real reason for them to change it. Unless they get some kind of enormous box beef need where they do have to come in and pull more inventory up. But other than that, I think they've got the margins kind of set where they want them. And if we find out that the placements for March were heavy and we put a record first quarter placements on, April is most likely going to be equal to what normally would have been last year. So it tells us we've got all the beef into the feed yard, all the cattle into the feed yard all the way through Labor Day. So it's going to be tough to say that we're going to be short of supply at any time.
All right. Well, Chris, thank you so much for joining us. Chris Swift with Swift Trading Company in Nashville, Tennessee, just down the blocks from our studios here. Tammy, back to you.